Welcome back to Dinar Trend Tracker channel. We will be delving deeply into a major topic that has been causing a lot of buzz in the community today. Rumors and insider sources suggest that Chase Bank will implement new internal regulations in 2025, and these policies seem to have something to do with currency exchanges. Has one of the biggest U.S. banks changed its approach to prepare its internal systems to deal with global currency shocks, according to these leaked updates? Specifically regarding the Iraqi dinar. According to the data, a formal, structured strategy is currently in the works, which is quite different from the way many large banks have always approached this issue, which is the focus of our investigation today. For those keeping tabs on the Iraqi dinar, these reports could have important repercussions. The assertions lay out concrete, doable adjustments to the financial system's internal processes. This goes beyond mere conjecture. According to the sources, Chase is reportedly making noticeable changes to his preparation. Updated verification procedures, new regulations regarding exchange limits, and detailed guidelines for scheduling transactions are all part of this. If you want to know how the big financial players are supposedly preparing for currency occurrences in the future, you need to know the specifics of these programs. It also shows that things are getting more structured and controlled. There was a lot of quiet or uncertainty about the Iraqi dinar for a long time when people talked about it in mainstream financial circles, particularly when it came to American institutions. Financial institutions mostly shied away from even discussing or making plans for massive transactions. The newly revealed material, however, implies that this dynamic has undergone a significant shift. From a place of uncertainty, Chase is reportedly moving into active planning, according to these insider claims. Included in this is the establishment of formal protocols to manage dinar exchanges, which suggests the institution is preparing for a potential future occurrence that could call for such stringent standards. This purported change is more than a little adjustment to policy. It's been characterized as an extensive reworking of operational processes. Rumor has it that new policies and procedures are being briefed to employees and that internal documents are making the rounds. Allegedly, these protocols will establish an appointment-based system for all pertinent transactions, control tiered exchange limitations, and impose stringent identification criteria. The bank appears to be preparing for a high volume of exchange requests, as indicated by their meticulous planning. They are making every effort to ensure that any future process is compliant, secure, and organized from the start. The introduction of a tiered system for currency exchanges is a key element of these purported new policies. Reportedly, this method would categorize customers according on their level of loyalty to the bank. There would be one tier for those with basic accounts, as opposed to private banking clients and premium clients who would be in a different group. Based on this setup, the amount of money a user can trade at once and the quality of service they get might be very different. By breaking out the details by account level, the bank would be able to better manage workflow, provide priority to clients with high net worth, and implement different compliance checks. These several tiers have their preliminary boundaries laid forth in the reports. With regard to Tier 1, which encompasses ordinary or basic account customers. Tier 2, which may include premium accounts or verified business clients, may have a daily exchange cap of $250,000. The daily threshold might be as high as $1 million equivalent, according to some publications, implying a far higher ceiling. The bank's plans for handling the amount and movement of cash during a possible revaluation event for the most exclusive clientele can be outlined by these estimates, which are still considered preliminary. The alleged structure differs from what is often associated with private banking. There may not be a hard daily limit for these customers like there is for other tiers. But there would be stringent requirements for this flexibility. Their big transactions, rather than being subject to a daily restriction, would allegedly be pre-approved by specialized banking teams and subject to thorough compliance reviews. That way, every single transaction, no matter how big or small, is checked off the list as having met all anti-money laundering and regulatory requirements. Along with these tiered limits, supposedly, we are implementing far improved verification procedures to keep the financial system honest. It would appear that the current state of identity verification is insufficient for any substantial transaction. Secondary reviews will be triggered by these exchanges and specialized currency compliance officers will need to sign off on them. Each and every one of these transactions must be open, genuine, and completely traceable in order for the audit trail to be completely visible. One important aspect of the newly characterized operational readiness is this increased inspection. The reports also reveal another important change: the exchange system is now appointment-based. It has been reported that once a revaluation is underway, walk-in transactions for this particular currency will no longer be permitted. Cash holders should expect a huge change in logistics as a result of this. This means people will have to really organize their transactions, setting them up in advance through the banking system. Preventing bottlenecks, effectively managing staff resources, and ensuring that compliance checks may be done without hurrying or being disappointed are presumably the goals of this metric. There seems to be integration between the model and the tiered client system as well. Premium account holders might get priority scheduling, according to reports. Because of this, clients may be able to secure earlier appointment slots or be assigned to a banker with expertise in processing their type of transaction. Along with successfully managing high demand and ensuring compliance across the board, this plan aspect emphasizes the bank's commitment to offering structured, high-level support to clients that need faster access or process bigger exchange volumes by 2025. The presentation also highlights policy improvements as a major component. Reportedly, a ROC's own push toward a more digitally integrated banking system is happening at the same time as these internal reforms at Chase. Iraq has been actively attempting to standardize its currency procedures, lessen its reliance on real currency transactions, and implement unified electronic settlement systems in line with international norms. This coordinated effort raises the possibility that Iraqi domestic reforms and the actions of international financial institutions are converging. Reports of suspicious activity within U.S. banks lend credence to this alignment. Reportedly, other financial institutions have also begun performing liquidity and internal audits, which are not part of their normal business practices. These papers and their associated analyses state that such testing and preparations are typically only made in the lead-up to big currency events or expected changes in the global financial scene. Extra information regarding the purported training that bank employees are receiving has surfaced, and observers view the fact that it coincides with Iraq's banking reforms as strong evidence that the policy shifts are intentional and not accidental. Reportedly, insiders from bigger Chase offices have verified that employees are getting training specifically for dealing with foreign currency transactions of a considerable amount. It is stated that this training would go over all the ins and outs of verifying information, including how to check the authenticity of notes and how to register serial numbers. Important for avoiding fraud, this will guarantee that all transactions are genuine and that all money is officially recorded and monitored. According to these allegations, new technology is being used to back up these procedures. There have been rumors that big transactions will be monitored in real time by systems powered by artificial intelligence. The bank would be able to rapidly monitor large value conversions and make sure they adhere to both internal policies and international financial standards with the help of this system, which would notify them when the amount exceeds specific limits. The bank seems to be actively preparing for big transactions by taking these operational procedures, which show that they are highly prepared. Volume in a fiscally responsible and efficient manner. The interim restrictions reveal something about the bank's approach. Simple accounts have a $250,000 equivalent daily limit and premium accounts have a $1 million equivalent, so you know what to anticipate. The data show a clear aim to regulate the flow of funds, while they are acknowledged as preliminary and subject to change. The logistics of this controlled, safe exchange procedure are secondary. It's a safeguard against the dangers of an unexpected, massive financial crisis that would affect the bank as well as the currency holders. The stated modifications also include security mechanisms. It has been reported that all exchanges, regardless of size, will supposedly undergo extensive verification processes. As part of this process, we scan high-tech notes to ensure their legitimacy. verification through comparison with established security protocols, as well as comprehensive tracking of serial numbers. The goal of these safeguards is to make counterfeiting impossible. There is no counterfeit money making its way into the banking system. In order to keep things steady and build trust during this crucial process, this methodical approach is required. Extra precautions may be taken to ensure the safety of some very valuable exchange levels. Various confidentiality agreements, including non-disclosure agreements, NDAs, may be required for these transactions, according to reports. Private and structured exchanges in the high finance industry often use this method. This ensures that delicate financial dealings are handled with the utmost care, safeguarding the confidentiality of the clients and avoiding any potential market disturbance. Worldwide, this is how big projects are handled. As a result of these changes, money can safely and discreetly flow to people. The significance of comprehending these newly organized criteria is emphasized in the reports. Get ready ahead of time because there will supposedly be a change from walk-in transactions to a system with tiered restrictions, appointments in advance, and enhanced paperwork checks. The papers stress the need of keeping all bank account details and identity details up to date and correct. Reportedly, once any official exchange mechanism is started, the process will be more efficient if the preparation is smooth. The articles also call attention to 3 new policy words that Chase purportedly established. A digital conversion gateway is one option. It promises to let customers convert their exchange promptly. Put money into an electronic USD wallet or, if you're in Iraq, into an account linked to the Central Bank of Iraq. It appears that there is a significant amount of digital integration. To ensure compliance, the second phrase is high-value transaction monitoring, which means the AI system is keeping tabs on exchanges over $500,000 in value. In the third place, we have the liquidity assurance window, a structural guarantee that aims to facilitate the timely and orderly settlement of large conversions within a 48-hour period. From what we can see from these 3 projects, the institution is operationally ready for fast-paced, high-volume exchanges. It appears that we are prepared for a contemporary electronic settlement based on the digital conversion pathway. Scalable regulatory and security issues are addressed by the high-value transaction monitoring. The liquidity assurance window is another indicator of the bank's faith in its capacity to swiftly settle big amounts. A strong and well-planned system would have digital integration, compliance powered by AI, and assured liquidity. By instituting rigorous verification and organized appointment scheduling, these policy adjustments also function as a safeguard for investors. Reportedly, the bank is taking precautions to guarantee the security of all transactions, eliminating the possibility of fraudulent notes or clumsy first-come, first-served lines. Although some may find the concept of appointments or restrictions annoying, they are said to be put in place to avoid confusion and make sure that every transaction is completely legal. Ultimately, making sure everyone's safe. Another important piece of information is the schedule for these adjustments. It has been claimed that the new policies for 2025 would be implemented on January 1, 2025. Nevertheless, it is highlighted in the reports that thorough staff training and internal testing are already under progress throughout this quarter. It appears the bank is gearing up to process a flood of currency exchanges just as the new year begins. Also, Iraq's own expected year of independence is 2026, which is in keeping with this schedule. Budget updates and its revised exchange rate framework. Major U.S. financial institutions were prepared internally at the same time as Iraq's domestic banking system reforms, which is seen as an intentional move. It alludes to a calculated attempt to make sure that large-scale currency conversions can happen across borders without a hitch as soon as they're greenlit. These are used to guide investors. Encourages readers to closely monitor these schedules for updates. In the beginning stages of any possible reassessment, there are individual plans and preparations. Many financial institutions' functions are discussed in the reports as well. These recent findings indicate that Chase will play a crucial supplementary role, which is in contrast to the common perception of Wells Fargo as the dominant private and structured Tier 4B exchange. Large-scale public redemption processes will supposedly be supported by Chase. This apparent division of labor would keep any one institution from becoming overburdened while still satisfying private and public investors within a system that is both organized and fair. At the end of the day, these reports are trying to tell regular investors to be ready. A structure is in place to provide a compliant, secure, and easy exchange experience. This framework includes the purported new restrictions, appointment systems, and verification procedures of Chase. According to the research, one's ability to successfully traverse the procedure depends on their level of preparation, the quality of their documentation, and their familiarity with the concept of tiered account rights. This is shown as an opportunity for deliberate preparation and well-considered choices, rather than hasty actions.